What's up, guys? Aryan here. Welcome back to another episode on A to Z on financial market. So we already talked about what is trading and investing and what are the differences, and rather if you want to choose one based on your personality. Today we're going to touch on a very important topic. Who's involved in the financial market? It's really important that you know who you're dealing with and who you're working with, because these people aren't playing games. When you're investing, you are working with the most sophisticated investors and traders. So it means you are competing with people who are expert in the field. There is no entry level and no one's going to give you another chance because you're just into the market. You're playing in the big league now. So enough said, let's talk. A fun fact, did you know people used to shout out their transactions and orders in the trading floors, which is known as pits, and this method was called outcry method. So trader used to shout out, sell or buy, or use their hand signals in the trading floor, and then when someone shouted out buy and another person at the same time shouted out sell, then there was a transaction matched together. Of course, that was when it was in the particular price. This method was largely replaced with the electronic method which we use right now, but in some exchanges they still use that, such as New York Merchant Exchange and London Metal Exchange. And still YouTubers use it when they ask for your like and subscription, right? As a trader slash investor, you come across to know people and firms that in some cases you need their professionality and their services to be able to access the market. So in this video, we're going to talk about some of the market participants, their functions and motivations, and of course, the most importantly, your relationship with them. One of the most known ones is retail trader or retail investor, which is a person who's working on their personal account, buying and selling financial instrument, and it's not on behalf of any other organization or firms or any businesses. So that is mostly like you and I. Retail traders and investors generally have small accounts and they trade on those accounts in their spare time. However, some of them may become more professional, or as the term says, semi-professional, and they can become a sophisticated investor, which we're going to talk about in the next videos. As a retail trader with small accounts, you have access to incredible financial markets that you can trade on any of them, including commodities, share market, forex, and cryptocurrency, and so many other markets out there. Next participant on the list is brokers. As a retail trader, unfortunately you can't go to your local exchange market and buy or sell shares or any other commodities. In fact, you have to go to your broker, which you can choose between many of them, and then the process of buying and selling those assets is going through those brokers. That means you generally need an authorized intermediary or a broker to act on your behalf on buying or selling your assets in the financial market, of course. A broker can be a big international firm or even one individual, and the range of services can be between full services or advisory management or only execution of your order. Full services means they're going to actively manage your account and give you personal advice. Most probably this is the most expensive service that they have. Usually advisory manager going to provide you with some recommendations, but the decision making is still on you. And the last one is only execution, which it means that they're going to do as you tell them on behalf of you on buying or selling or holding your assets. Obviously, these services can be very different in range of brokers, but these are mostly the services that you can get, and the prices are different between different brokers. But usually execution only service is the common one and that all of them have, and the cheapest one, of course. The greater input you want from your broker, the higher is the fee. On the other hand, there are some brokers out there that, other than buying and selling on behalf of the customers, they have their own individual accounts for their firms, and they buy and sell for themselves in order to make profit. These brokers are known as broker-dealer. Unlike a regular public company which is listed in a stock exchange, there are some financial assets that are not listed in any exchanges, such as forex pairs or even unlisted shares. If you want to buy these financial assets, then you have to buy OTCs, which stands for over-the-counter market. If you want to buy such an asset, then you have to buy it from a broker dealer who provides it as an over-the-counter market. Just keep in mind, OTCs don't have any central physical locations. They exist because people are trading over their phones or their laptops electronically. That way, people can buy and sell these assets without seeing each other. So these were the participants that you probably knew already. These are the common participants that you probably trade with and you probably know already and had interactions with them. But there are some others that you most probably won't trade with, but it's very essential to know about them because they have an influence over the market. Just imagine you want to buy a specific financial instrument, but no one is selling it. Fortunately, that doesn't happen so often because the market is so liquid, and there are usually other people who are buying or selling at the same time as you, who take the other side of your trade for you. And in most of the times, these people are market makers, known as liquidity provider. So basically, market makers help the market to go forward smoothly. So a market maker is basically an individual or a firm that have an inventory of specific security and keeps continually quoting the price to the buyers and sellers. So when you send an order to buy or sell, then if it goes through a market maker, they generally give you what you want from their inventory, or they send you to another market maker and then they provide you with what security you want. And that happens electronically almost instantly. Most of the market makers are working in some specific exchange, and your broker transacts with them on your behalf. The only market maker that you are in contact with directly is from Forex, which they provides the facility to buy and sell currencies on over-the-counter market. Next one on the list, institutional traders. Institutional traders or investors are the organizations who deal in the financial market. It's basically same as retail traders, but they have more funds and accounts and much more resources. Now I'm thinking it's not the same at all. Not even a bit. The fact is, you're not going to deal with the institutions all the time, but it's good to know about them because they can influence the market very strongly. Institutional traders usually trade their pool of money on behalf of individual investors. This means they can sometimes trade in a magnitude that change the direction of the markets and influence on the market, especially in share markets. And now we can see on cryptocurrencies. These institutional traders can include hedge funds, pension funds and mutual funds, and banks, and even life insurance companies. Not to mention, because of the scale of their trade, they usually pay less commission than the retail traders. So they have less expenses and more fun to have more profit. Next on the list is high frequency trading. High frequency traders are like institutional traders with use of sufficient technology. As the name says, the high frequency traders use computers and algorithms to automatically apply the strategy and the algorithms on the market. So these traders have the advantage of not needing traders to work for their company, and they also can have multiple trades in a fraction of a second. The human brain cannot take that, so they can have a small profits, so they can open and close the trades in a space of second, millisecond, or even microsecond. And then they have these ultra short term positions that they are looking for very small profit in just a second. So if you found this information useful, then like, subscribe. It's going to be awesome. And as always, if you have any questions or comments, please write them down below in the comment section, and I'll make sure to answer all of them. Thank you so much. Catch you later.